All right, hello, welcome traders. It's Wednesday, March 12th, 2025. Been a couple days since I did a video. I have had the flu or something absolutely terrible for days now, and I have had enough energy to work with our members on Discord and get some videos done with the members live, but I just haven't had uh, the strength to knock out some YouTube videos. But let's get into it. Let's talk about what's going on in the markets here for the last couple days. And really, it's a matter of some pretty good selling. It's all tariff tantrum based for the most part, and some profit taking on those things. And other than that, if you're following your plan, you shouldn't be in too bad a shape. Okay? Now, if your account's blowing up or you're having massive losses, then you're trading too big, or you're not following your plan, or you didn't have a plan, or who knows what you're doing. But we want to make sure that hopefully you're following a process that makes the most sense. So let's get into it. So what I want to do today is I'm going to take a little bit of time today, and I'm going to cover a bit of my trading plan, talk about some of the trades in the last couple days out there, and I'm going to talk about the markets and what I think we're seeing. I'm going to give you one trade at the very end. So if you stick along with me, we're going to keep it short today. I just don't have, hopefully, the energy to crank this out. And I apologize for my voice if it's scratchy and what have you. It's been a struggle to just exist for a couple days here. So, all right, let's get back into it, and let's share some stuff and talk about what's going on. So, what I want to do is take a few minutes and go through the trading plan. So, for me, you got to have a defined trading plan, and I'm going to show you a little bit of my trading plan here and talk about the things that are really important to me as we move forward here. And I'm going to touch base on just a couple of the top pieces here. So goals for my account. So this is the trading account, not an investing account, none of that stuff. This is a trading account. Goals. Number one, the goal for the trading account is to generate 2 to 3% of monthly income. Okay, that's 25 to 30% annually if we can do that. If we can get close to that 30 even, okay, we're going to double our money almost every 2 years, which is phenomenal. So if you take the rule of 72, if we made 3% a month, that'd be 36%. The rule of 72 says I should double my money every 2 years. That's the goal. We've been doing that for quite a while now. Last year was a down year, but the year before was great. The year before that was even greater at 82% in 2022. And we're off and running this year with pretty good realized gains here. So we've had a good trading year so far, despite some of the market volatility that we've seen for the last, 4 weeks now, since this whole tariff thing really took off and has been wreaking havoc everywhere. And really, it comes down to there's just a lot of uncertainty. There's tariffs are on, tariffs are off, tariffs are on, tariffs are off, tariff over here, tariff over there, somebody's retaliating, this, that, and the other thing. Those have really been the key things. But today's CPI number showed us that, inflation's not right now is not jumping out of control. Great number today. The markets like the number. They rallied for the most part on the session today. Most stocks were up on the session today. So good stuff overall, but we are really overextended to the downside. So any kind of a bounce here to me was pretty expected. Now, whether it lasts or not, I'm going to talk about that, and I'm going to give you my market take for the next several weeks to a month or so. All right, so the goals. Okay, 2 to 3% a month income. Okay, my goal is to generate income here, and the income I'll use to grow my account, but it's all about the income. I'm not going to buy something and let it sit there and look at the capital appreciation. That's called investing. That's a whole different account. I'm not buying leaps here. I'm not selling leaps here and just shutting them down and trying to get that. That's in that lazy trader account of mine. That thing's doing just fine. Nothing to do there. You don't have to do a whole lot to generate gains. You don't have to be wheeling and selling covered calls on everything. Okay, you don't have to be doing any of that stuff. You don't need short-term stuff. In a investing account, I think you don't want to put in all of that time. But trading account, let's stick to the plan here. This is where Okay? I focus on generating income. My goal is if I focus on individual trades and realize gains, then the net lick's going to take care of itself. Okay, and that's the goal. So focus on hitting the monthly realized P&L, numero uno, not focusing on growing the account size. If I continue to win and generate gains on all the trades, the account's going to grow. Okay. All right. And you're not going to get discouraged because you're winning and you're closing trades and you're adding to the kitty here and you're generating cash flow because that is the ultimate goal. All right. I also don't want to be constructing a portfolio that causes me to be consumed with watching the market every hour of the day, especially the last couple of days when I just haven't felt good. I've got to sit here in front of the screen for 8 hours a day, trading and trying to figure it out. Really don't have to do much of anything. The account pretty much runs itself for the most part. You check in a couple times a day and you're in good shape. Okay. Now, others out there, you guys may want to be doing all kinds of stuff. So if that's the case, knock yourself out. All right. I do watch the Greeks. I do watch my delta. I like to keep it at roughly no more than zero point 0.2 of net lick, which I'm pretty close to that. Theta, 0.3% or more is the targeted minimum. If you try to get too much theta, you're going to take on too much risk. Okay? If you don't generate enough theta as a premium seller, you're not going to hit your income goals. Okay, and then Vega is, I'm looking really at 4 to 5 times my theta. So that's the goal in the account. I like to manage the account based upon those three Greeks. All right, let's talk about the most important part of everything that we have here, though, and that is risk management. All right, so buying power is a measure of portfolio risk. Oh, I knocked it off target here. So buying power is a measurement of portfolio risk. It's the main driver of the account. Okay? It's the measure for which I use to determine whether I should trade or can't trade. Okay? It's the most important piece of all. Yeah, delta's great. Yeah, theta's great. But you know what? The most important thing for me is buying power. If I manage my buying power and I keep it under control, despite volatility spikes, despite market sell-offs, despite anything that might be happening out there, if you can control your buying power, you're going to give yourself opportunities to grow. The same thing in the investing account because I'm sitting right now in my investing account with like a 50% buying power and that 56% in that account. I've got plenty of room and I can go up to 70, 80% invested in that account because it's long-term holds, it's not futures, things like that. I have a lot of room to add. I'm waiting to see the whites of their eyes on some of these stocks and indexes, and I'm going to jump back in. I'm starting to ease in a little bit on some QQQ and some other key stocks, but I really only own 4 stocks and mostly indexes there. But I think this is a time where you start to not go crazy. This is not the bottom. Okay? It's a time where maybe I can add a little here, very small, and if we go down more, I'll add a little bit more, and that's what you want to do. Now, in the trading account, totally different. I like to keep 50% available in normal market environments. Okay? And I mean normal market environments. Okay? This is not a normal market environment. Markets don't swing up and down 5 to 10% in a week or two, typically. Okay? Markets don't jump to, a 27, 28 VIX in a couple days normally. So you've got elevated VIX, you've got big swings in the market. You've got a lot of news hitting you from all different directions. This is not a normal market environment where we have a VIX of, whether it's 12 to 18 or somewhere in that range. That's a little bit more normal of an environment. Right now, you've got a new president who's got an agenda and he's going to put it into play. I'm not making political comments, good or bad, on it. I'm fine with probably most of those things happening, but it's really causing havoc on people's portfolios out there. So it's just not normal. And for that, you got to be at that 50% buying power. All right, so 45 to 50% is the goal with futures using span margin. If buying power gets over 60% in my account, no new trades. So I've effectively shut down the account for a week or two. Of adding new trades. In fact, I had a 112C to put on Monday, didn't add it. Even though it's a campaign trade that I put on every other Monday, I didn't add it this week. I have a SPY leap campaign that I add every single week. Didn't add it this week. Why? Buying power is too high. And because buying power is too high, I am in a lockdown on the account where I cannot add trades until I take something off or buying power reverts back down. Why is it up? Primarily, my buying power is up, mostly due to those SPY leaps, just as the market's selling off here. It's not really due to any span margin increases. I think the volatility hedges and some of the other things that we have working have kept buying power pretty good shape, but it's just too high, right? And in higher volatility times, you can exceed the 50%, okay? But stay on alert for margin increases and watch your position. So now that it's higher volatility, I can exceed that, not on purpose, okay? But I'm okay with it moving up, and it's up. It's in the 70% range right now. Okay, so it's elevated, but so is volatility. Volatility is extremely elevated. It's one of the highest readings in a year. There's only been two higher readings in the last year or so. All right, and then never have more than 85% of the buying power at any given time. And if that happens, you got to take action to reduce it. What do you do? Number one, I start to close winning trades. Number two, I will close short puts of a put debit spread as part of the 112s, which will give me more of a hedge with the long puts. Okay, and that'll reduce my buying power. I can close smaller losers. I will close my bill position. So my treasury bonds, I will close that, free up cash, reduce BP. And then the last piece here is I can add a hedge. So there's five things here. They're numbered a little incorrectly here, but there's five things here you can do when your buying power gets up there, right? And also the last two pieces that I think are really important is number one, never risk more than 2% of your portfolio on any one trade. Really helpful here to size appropriately so that if you do get stopped out, and I got stopped out on two trades in the last couple days. I got stopped out on two trades. Neither one of them was 2% of my account. They were about 1.7, 1.6% of my account. All right, so I was sized appropriately. They hit my 2x stop. I cut the trades, off they go, okay, and I'm in good shape. All right, so never risk more than 2% of my portfolio on any one trade, and then never invest more than 40% of the max allowed BP in any one strategy. So if I'm trying to stick to 50%, 60% BP, 40% of that BP that I'm using cannot be in any can't be in any one strategy. So no more than 40% in any one strategy, whether it be the SPY leaps, the 112Cs, Strangles, none of those can exceed 40%, but I have a plan for those. All right, so risk management is the key here. If you adhere to solid risk management principles, especially if you're doing things like I do, where we're trading futures and you have span margin or you're selling premium, you keep your BP in check, which I've been doing. Okay. You monitor, shut yourself off from new trades so that you don't add risk. Okay. I would love to put some trades on right now. There are so many good trade opportunities with this higher volatility. I'm stuck. I'll tell you the two things that are killing me again are SPY leaps and also CL or oil trades. I have winning trades, but the margin requirements have increased substantially from when I put those on. They've almost tripled right now, and they're really hurting my available buying power. I may look to pull those off for small winners just to free up some BP so I can get into some of these other trades that I think are worthwhile. Anyway, strong risk management is the key to success. I'm nothing near trouble. I wasn't in any trouble, haven't even sniffed trouble on the markets because I'm adhering to my risk management. Okay. I'm not going to go through trade rules with you, but number one here, plan your trade, trade your plan, never trade without a plan. If you don't have a plan, you're just following people on YouTube and Twitter and doing your own thing, but you don't have really a plan, stop trading, close your trades, get a plan together, test it out, get in with a group of people that'll help you analyze your plan for mistakes because you can't see the picture when you're inside the frame. So you got to get in with a group of people that will analyze your plan, give you feedback on your plan, and make you a better trader, right? And then number two here, never modify or break the trade rules. And then number three, stay mechanical and trade without emotion. I'm not going to go through them all with you, but I'm a pretty emotionless trader. I took two losses this week on stuff I stopped out on. It's part of the deal. Okay. I don't expect to never lose. I expect to win 90% of my trades, which means one out of every 10 trades I'm going to lose. If I lost two trades here, but I've already put on 30 trades this year, 20 trades this year, it's a pretty good batting average. All right. Um, Not going to go through my daily portfolio management. I do this a lot with you guys every night, but I do go through the nightly charts. I look at what's happening here. I review my trades every day. Are there naked puts to be taken off, okay, that are in trouble? Okay. But any naked puts that need to be hitting, they're hitting profit targets, number one. Any put debit spreads that are profitable that need to be either adjusted, which I did. I adjusted two put debit spreads this week. One was a 300 wide. I rolled up the shorts 100 points. So I pulled a bunch of cash, a couple $1,000 of cash out of that trade, and I still have a 200 wide put debit spread that could still pay me thousands, almost $10,000 or more. Okay. Another put debit spread, I actually rolled up the shorts on that one as well, booked $1,000, and now I actually closed it today for another 900. So I booked about $2,000 in profits. Certainly those help offset some of the losses from stop trades, but just managing by the plan. And then anything in trouble, anything getting close to that 150 to 200% loss, depending on what the loss criteria is. If so, start monitoring it. I don't have anything that's in that range right now because I took off the two bad trades and we're good. Is BP okay to add new trades? Well, right now it's not, so don't have to worry about it. So really looking at charts isn't a big deal. I do it more for our members to give them some trade ideas, and I'll give you guys one trade idea in just a minute. And then if I do have money, I start filling my core trades first. Well, today I got back down buying power wise with the market going up, VIX coming down a bit. I was able to actually add another 112C trade on today, which was a beautiful setup trade with this volatility where it is. So I added that trade on today because, again, add trades based on my strategy allocation. So I'm filling my core trade first, which I did not do this week on Monday. It took me 3 days before I was actually able to put that trade on here because buying power said, no, no, can't do it. Okay. And then I'm adding those trades to the spreadsheet. I'm not going to go through managing trades on vacation. If you want, you can pause, you can look through this. If you want to take a look at my strategies here, you certainly can do that as well. But I've already told you, SPY leaps takes 40% of available power. 112Cs, 40% of available buying power. Strangles 10%, and then spec trades 10%. I'm pretty much adhering to these buying power limits now. The account is more than this now, so it's grown this year, but I'm adhering to those things pretty doggone well. So bottom line is it's all about your risk management. All right, let me give you two things that I want to cover with the markets and where I think they're going right now. So let me share, and I'll give you one trade that I think is a great trade opportunity. So I'm bearish short term. Here's why. Number one, if I'm looking at, let's go to the ES. I'm looking at ES. Okay, here's the downtrend. You can see the downtrend line. We are in a downtrend. Okay, number one, so we're below the trend line, bearish. Number two, daily PSAR, bearish. That's number two. Number three, 21 EMA, the green line, has dropped below the 50 EMA, the fuchsia line. Okay, and it's widening as we get, which means the drop is accelerating. Okay, that's number three. Okay, and but number four here is we are below the 200-day moving average. Nothing good happens below the 200 MA. Nothing. So because of all four of those points make me bearish. There is no reason to get long here on the markets. No reason. And I think even if we recover here and start to bounce up towards the downtrend line, the 21, the 200, I think we're going to run into some resistance there as well. And if I were to draw anchored VWAPs from the height here, that's also going to coincide right in here around this 58.60 level, which is where the 21 is. Oh, there's a lot of overhead resistance. I'm expecting that the markets will potentially bounce or rally, or at least trade sideways for a bit. Maybe they'll rally up in here, hit this, but I think they're going to roll over. If we get the dreaded H pattern, all bets are off on how far down we go. It could be ugly, uh, but momentum is over. We're oversold, which is the nice thing for a bounce. But I don't think you put all your chips in and start adding stocks here. I think you just stay out. We're oversold RSI, we're oversold stochastic momentum, but on the weekly, we are not oversold. We are still just dropping. I think there could be more damage to come on the weekly. So I'm still bearish right now, short term on the market. The long term chart still fine. I mean, this is still a pretty nice looking uptrend chart. We're well above the 200-day moving average and the 21's above the 50. Now, that can change if we continue to head lower, but right now, this is a nice bearish, or sorry, bullish uptrend. And until we break A or A, this line, which is the longer term line, yeah, nothing's really changing here. We are in a bearish PSAR signal, but we'll keep an eye on it. So anyway, I'm still bearish long term. Oil, same thing. We're in this downtrend. I am bearish on oil until we break through some of these things, maybe come down, test, and then we start to move our way higher. I do not see oil recovering. Okay. I told members exactly why. We talked about OPEC Plus. We talked about Russian oil. We talked about things that are happening in there with demand. I'm not bullish on oil at all, even down here, even at the support level. I think there's more potential pain to go in oil. Just like with the ES, any potential bounces to me are opportunities to get short again. Right? Gold looks pretty good, starting to head up to the top. Gold's the one area I think or just like two areas that are bullish. And then bonds is also nice in here. We're right in this VWAP pinch from these previous highs. In fact, I'm going to get rid of this one. And let's add this VWAP. Okay. We've got definite support underneath, but if we go out a little bit further and we go to this level, take this off, okay, and we'll put that anchored VWAP back on up here at these highs, okay. You can see that we're in this pinch area right now on the anchored VWAPs, and I think until we break above this, bonds may move sideways a bit, but I definitely think there's support underneath. I'm bullish on bonds. I'll be selling bonds here, naked puts on bonds. Right. And then we have this uptrending line that I think we can bounce and move higher. Anyway, there's a couple quick things. Let me give you the one trade that I think is a good setup in here. And that is Amazon. Amazon's the one trade that I like. And let me tell you why. Right. Today, we had the PSAR flip bullish. So we had a bullish flip on PSAR today. We are down here. If we look at the weekly, we're down here at support. We're down here at the Bollinger Band. We're right at the 50-day moving average. A lot of potential support here. Can we go lower? We can, okay, but I like where we are. We're still in the downtrend line, but we're getting close to that. MACD is starting to curl up. RSI is oversold and moving up, and the stochastic momentum's just been flat in oversold territory. But if we get another day of movement or so, I think Amazon can actually break out of this piece in the next couple days. I'm not telling you to go and mortgage the farm and get into Amazon today, but I like this best of all. And the last thing is my calculation of intrinsic value on Amazon lands it between 190 and 200 as the actual valuation. Okay, we are in there. We've been around this 194, 198 level here. I think Amazon is absolutely fairly valued here versus a lot of these other stocks. Nvidia overvalued, okay? Tesla overvalued, Palantir way the heck overvalued, okay? Google pretty close to fair value, okay? But Amazon is at fair value. I think this is a great price to get in. If you can sell premium below this 190 level here, I think that's a good spot to take assignment if you want to. and own this thing longer term. All right, there you go. There's my one trade for you. The other trades, I'm just being cautious. Okay, I just don't see a well, we could get a bounce and a rally. Bear market rallies are strong. Okay, but I think we still roll over, and I'm more worried about the April tariff situation than I am about this current one with Canada, Mexico, and China. Okay. This will get resolved. It's all about the drug trade, all about the fentanyl. Okay. If both Canada and Mexico start to make some moves to securing the border against drugs, this will all pretty much go away. But the problem is going to be in April, April 2nd, April 9th, whatever that date is. I keep hearing different dates. When we start to look at the reciprocal tariffs with all the other countries, Europe and everybody else, and we're going to see that we've been getting screwed as Americans along these lines, where we're paying 30% tariffs in other countries and they're not paying any here. Pretty sure that's going to get uglier. And that's going to force the market, I think, a bit lower and put a lot more pain on it. Again, I don't want to be political on it. You get the point. I'm all for being fair and negotiating down. Do I love the, hey, let's slap 25 or 50% on somebody and see if they cave and meet us halfway? Don't know if I love the strategy, but because it plays havoc with me and my accounts. But if you trade your plan and you adhere your uh, management tools, okay, if you adhere your risk management, you're going to be in great shape. All right, there we go. That's enough for you guys today. Take a look at Amazon. Keep it on your radar. I'm also looking at the money 111s on ES here. I think that's the play right now where we have no risk to the upside. And if we pull back, either that or a Jade Lizard, both of those trades on ES or on the market overall right here are great opportunities because I think we can go lower, but we'll bounce first. All right, there you go. Have a great rest of your evening, folks. We'll see if we can be back on here tomorrow with you. I'll see if I'm in good enough shape. I made it through this, so I'm pretty happy. If you like this video, click the like button down below. Help a sick guy out. Give me some likes down below. Get the word out. Help us out with the channel. If you're not a subscriber, subscribe. Hope you got some value out of this today. And if you want to see what we're doing in the Discord, come and train with us. Come and learn. Huge knowledge base, massive amount of members giving great feedback, giving their trades. I mean, it is a huge repository of really, really smart and great traders. If you're not there, this is the time to do it so that you don't miss out on what's coming down the road. Have a great evening, folks. We'll see you later. Bye-bye.